And catch top market guru Ramdeo Agrawal on Business Today TV very soon. You can send in your questions on the WhatsApp number on the screen by 4 p.m. Friday. The recently demerged financial services arm of Reliance, Jio Finance, has entered into an agreement with BlackRock to jointly enter the asset management business with a combined investment of $300 million. As Reliance has done with telecom and retail sectors, playing the role of disruptor in both, will it do the same in financial services? BTTV Sakshi Batra spoke to Mr. Chokkalingam of Economics Research to find out what the combo of the two powerhouses means for the industry.
How do you view this development just from Reliance Industries' perspective?
Certainly. I already covered on the Reliance industry. I am extremely bullish on Reliance industry. In fact, in my research report, I have been communicating to our people that Reliance industry is the best stock in Sensex and Nifty. I may be wrong, but that's my conviction. I personally don't own any shares in Reliance. This conviction comes from the fact that one, he has been reducing the share of oil and gas, which has government intervention. That business share is going down, whereas the consumer-oriented business share in the total revenue profit is consistently going up. And second, they have a credible track record of successfully building new business like mobile telecom and retail. I am 100% confident that they would repeat such successful experience as well as in financial services and green energy, etc. And they are also getting into FMCG. So they would create a size step by step. And third, the unlocking potential. We saw the way the Jio Financial Services value. Now, this particular development also, the deal with the BlackRock, is going to be phenomenal. In fact, not only for Reliance Industry, JFS shareholders, even for the common investors, because it is going to give tough competition to the existing players.
How are you viewing the other asset management companies that are listed in this business, broking houses, since you're saying that could be the next foray for the company? How are you looking at the listed space and how is that going to get impacted with this?
Broking companies would be the worst affected, but of course, to be very fair, it is too early. They have not mentioned anything about the getting into broking, but obviously it makes a lot of sense, common sense. So they will be affected because it's a commodity business. There is no role for knowledge. So that will be the worst affected existing players, followed by asset management company, particularly in the debt product and all. I'm not saying they have better knowledge than equity people like us, but then because returns are more or less same across the board for most, the Reliance can make a disruption in the debt segment. But in equity segment, the size matters only to some extent, but to a large extent, the performance matters. Yeah. So all these companies will be under tremendous pressure, existing companies. If they have to survive, or even they have to beat Reliance Jio's asset management company, they have to focus on the performance consistently. They have to improve. Otherwise, it's going to be very tough after the entry of such a big name. So therefore, it is little early to say whether the existing player will be wiped out. If they will be wiped out not because of purely entry of Jio, but because of the competition Jio would add in terms of performance, that is going to matter. So net to net, anyhow, it is slightly negative for all the existing players.